Welcome to Profiletraders. This is Reza and you're listening to my market analysis for February the 8th. Yesterday, as we approached a very important level of support, which was very close to 1820, a long-term buyer came in and reversed price significantly to the upside, and therefore I indicated that this rejection off of 1820 was very possibly putting in a short-term bottom, and I said that if price returns back for a retest, it most likely going to encounter again support. So yesterday bullishness was totally and entirely almost reversed during the overnight. However, as soon as we opened, instead of finding a whole bunch of new liquidations coming in, the buyers stepped in on the pedal and we pushed up and almost in half an hour retraced the entire overnight to the upside. Then of course, because we did too much too fast, another retest of the low was expected. I provided an area of support to my room to go long on a retest between 1830 to 1834, and that's exactly where price came into the afternoon and stopped. And after retesting that area and not being able to break it, we saw yet another very aggressive push to the upside to a level of resistance which I gave you yesterday, which was 1864, where the move was entirely stopped. What can we conclude off of this? We can conclude that the market is in an extremely distressed and confused state. The fundamentals are not here any longer to support big rallies. The Federal Reserve, this entity of clowns, is completely lost and out of options. Half of them are still even speaking about rate hikes, believe it or not. And the remaining of the central bankers have also lost credibility, because all that they know is just come out every 2-3 weeks, spell out the magic word quantitative easing, stimulus, hoping that magically things will change, but things do not change, and this equity massacre around the globe is keep on going on. But because on a daily we are at a very significant support, it is very normal to encounter the battles that we are encountering here. It is not very easy to be able to break the market to the downside out of this 1820, especially after having dropped pretty much straight from 2075 to this low of 1820. It's normal, it is fighting, but in my opinion, it is a matter of time before that low will break. And once that low will break, the next level that we will be going is going to be 1780, and after that 1650. At 1650 I will be out there telling you buy all that you can on sight, because at that point market will be fairly valued. But at this stage, absolutely not. At this stage, any pushback to the upside of significance is going to be used by the professionals to sell into it. The fundamentals are horrible, and whoever says that we are at full employment and that everything is rosy and everything is great must take medicine, or most importantly psych medicine, because obviously they don't know what the heck is going on and what is taking place in this economy and around the globe. So Since 64 was rejected so aggressively to the downside, 1864 is now major support and resistance. And as long as we remain below it, we are either going to do what we are doing, which is just chop and churn like mad, or we are going to at some point come down and break through this 1820 and then go towards the next level down, which was the 1780, which I indicated. So unfortunately for you and for anyone trading this market, now we are in a very large bracket, and I can show you another chart where you will see better this bracket. The bracket goes from this low of 1820 to the high of 1864, and anything in between, hang on to your hairpiece because it may fly. 7 and 8 points and 9 points in this market, it's becoming irrelevant. You are talking about swings of 30 points up, 30 points down. As a result, your entries must be extraordinarily precise. You have to be extremely patient to wait for the major levels to conduct business from. Anything else that you would choose that is a garbage location, I personally assure you that you're gonna get crushed, because when you go up 30 points and retrace back down 30 points, anyone that used that 30 points up to buy on pushback downs support, every single support area when the 30 points get retraced is violated, and anyone buying into support after a leg up or a leg down is just wiped out. So very volatile condition, very uncertain, and it's a very bad sign in my humble opinion for what it is to come. And also when you look at the big names, the Amazons, the Googles, the Apples, the Goldmans, the Teslas, all the good old boys that used to make people rich, unfortunately now they are in the mode to send everybody into the poorhouse if you have the misfortune of buying them at the wrong price and the wrong time. Because pretty much day after day now since January, all they see is punishment. And this kind of excessive volatility mixed with a lot of uncertainty usually is precursor of much bigger trouble to come ahead of us. So please be very careful with this market. Select your levels extremely carefully. As much as you can, select levels that are far away from where the current price is, and be disciplined to wait for them to be reached, and only then conduct business from extremes and selective areas, and avoid the middle of any given wide range of back and forth because it's brutal. And now looking at crude, another absolute carnage. I mean carnage, bloodbath, genocide, murder, you name it. I mean this is just horrid. Today we did break below $29 and they didn't even care. It dropped straight to below 28, where it finally found a little bit of a support. The daily chart is at the verge of a literal collapse here. If we manage not to hold this low here of 27.50, the next drop could literally take us straight to 25, and then after that $20. And by the way, in case you didn't know, you remember those 500,000 barrel a day that Iran is now allowed to sell, and in exchange and for the gratitude that Mr. Obama handed over $150 billion and a billion other goodies in that horrible, disgusting deal. They are getting paid euros now. They said they don't want dollar anymore. They want to be paid for that oil with euros. And guess what? That oil on the open market, you can buy it all day long for $20. That's how much the mullahs are selling their oils right now. So 27.50 is the line in the sand. This 27.50 breaks down. God protect crude, because it may become literal apocalyptic move to the downside, straight to 25 and then 20. If we do hold that, well, for anything bullish to happen, we need to cross back through 20. No, I'm sorry, let's round this thing up. We need to trade back above 29. If we do break back above 29, then I can see the potential to come trade towards 29.65, and then after that there is a POC up there at 30.22. On the downside, 27.5. That's the magic colossal amount of support. That level breaks, we have to see how the reaction will be, but it could get very, very nasty and ugly. Overall, today's action was very bearish, very weak, very bad. And the chart on a daily, long term, short term, no term, big term, small term, doesn't matter which term you look at it, looks horrid. And if the crude, which is the widest used commodities for transport, manufacturing, and a whole range of other things, is showing such a terrible weakness, I can assure you it's a sign that the global economy is in a very, very big state of distress. So this is looking very bearish until we do not break above 29. We should either see consolidation down here, and the moment we do break below 27.5, we need to watch the reaction, because this could lead to a very, very short term washout liquidation to the downside, which should push price down to 25 and then 20. Thank you for listening, and if you have any interest to learn market profile, check out my website profiletraders.com. I am offering you a very good deal, 5 courses, 1 year to my trading room, all of that for $550, and you have a 30 days money back guaranteed backing it up. Talk to you next time, and have a great evening.